Today marks day number 73 of the $1,000 account challenge, and there's really not much to be said about today. I'm down $143 in the account, or 1.10% of the total portfolio balance. I took two losing trades, and they weren't necessarily bad trades. They were just trades that did not work. If you don't know, my name is Gates. I'm taking $1,000, and I'm day trading options to see how far we can grow this account. Off the day trade watch list, we had Meta, META, as a long idea above $503. We're on the 1 minute time frame for Meta. We do break 503 right here, pushes higher into the high of day, consolidates, presses even higher into the high of day, pulls back, bounces off of 503, and I'm thinking, this is it, baby. This is go time. So I took a long entry on the bounce off of 503 for the move up, looking for the high of day move from here, and we just don't get it. The contracts here moved really fast, so I did not get a chance to cut at a percentage point that I really wanted to. This was about a 23% loss that I took as Meta pressed down below 503 and then even lower, retesting the 502 mark. Now, this is something that it's part of trading, right? There's nothing here that we could really do other than cut the position the moment that the trade doesn't work. And even though I did yield or realize a 23% loss on this trade, look at what would have happened if I had held on to this thing. I mean, Meta just dropped and dropped and dropped and dropped and dropped. So even though it was a larger percentage loss that was taken here on Meta, it was the right choice to close this position out the moment that we did and the moment that the trade stopped working for us as it dipped back below $503. Now, the next one on the watch list was Tesla. This was a short idea below $157, but we edited this level to a short idea below 156, given the move down to 157 and below 157 in the pre-market session. So we get the initial drop below 156 right here. And I'm thinking at this time, like, I want to go short on this here, but also it's really early in the morning and I didn't want to take on risk that early. So I figured, let's just wait. Let's see if it gives us a retest of 156, stay patient, and maybe it'll also give us more confirmation. So we do get the move lower into the low of day. And by the way, had we taken this initial entry, it would have been 20% profit. So we give it the room to work here, not taking the trade, not jumping the gun. We get the rally up, and I'd make the decision here to add and scale into this trade up to $156 with a stop loss at 156.5, which is a great plan, a great trading plan. We get the initial move up here. I take the entry there, take the entry here, and then add to the position there after we start to get the curl over at 156. Now, something really important here. I take my initial entry at around $155, nearly $1 off and away from the long trigger or short trigger at 156. Why would I do that? I did this for a very specific reason. At this time, Tesla has been making all of these lower high candles. And so my thought process here was that Tesla will continue or may continue to put in lower high candles. And so since we missed the initial entry there, I did not want to miss another entry over here. This potentially could have been a 2-candle flash move up that puts in a lower high, gets sold, and runs back down towards the low of day. And so in an effort to mitigate risk, but also put some size on to be able to catch the move and take advantage of the opportunity, I take the entry early, about halfway through this candle. So I wanted to explain that to you. That's why I did that. I added to the position up here simply to put a little more size on and lower my cost basis some. And then the same thing over here. By this time, after 3 adds, I'm in with my size that I want to be in. I do not want to add to this position anymore. And we're holding, right? Unfortunately, we were not offered 10% because we were so far out of the money on the contracts. We were not even offered 10% profits when Tesla pulled down to 154.5 area. And then over here, when we get the pop move up, this is a higher high. Initially, my stop loss was 155.5. No reason to wait for this to get that far because at this time, we noticed that Tesla was making lower highs. Here, I'll draw it for you, as well as higher lows. And so I said to everybody, I said that if Tesla creates a higher high above this consolidation right here at 155.2, we can cut the position. No need for us to wait for it to get any higher. So I did cut the position about halfway through this candle as soon as it started to make that move and I saw this volume coming in. It was the right choice to do so because look, Tesla did continue up higher. And on this trade, I actually only took about a 10% loss, though the monetary value of this loss was larger than the monetary value of the Meta loss because I had a bit more size on this from scaling in a few times over here. So that's it. Those are my 2 trades for the day. Again, not much really to talk about other than my strategy today just didn't work really. I mean, we didn't get too much follow through below or above those trigger levels, and that's okay. This is trading, and you're going to have that sometimes. So those 2 losses added up to $143 of a loss, or down 1% of the total portfolio balance, but hey, this is nothing in comparison to the gains that we had yesterday. So I do hope that this video has helped you out. Press that like button for me if it has, and consider subscribing to the YouTube channel as well, as it's just the best way to support me and this type of work that I do. Plus, it's free. Thank you so much for your time, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.